Hello traders everywhere. Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub. Welcome with today's midday update for the 27th of November. You know, consumer confidence just jumped to its best levels in 54 months. And why is nobody willing to take a haircut? That's the question today. Okay, so consumer confidence is up, but it doesn't translate into the stock market. Stock market's a little bit mixed. The Dow is down, the NASDAQ is up a little bit, and the S&P is about unchanged. You can see that right here on our chart. Right here. And so what's really going on with these markets? We're going to be looking at them in gold, but in detail. But gold is down also today. But I think the one thing I want to look at, we talked about this last week, and that was the Japanese yen dollar, the dollar against the Japanese yen. That was the base we talked about, the breakout. And we've had a nice move, almost two big handles on the upside, trading close to 83 at one time. It's pulled back a little bit, currently trading 82.16, but still up on the day. We see this as being positive for the dollar. Now also on MarketClub, you can get the news. The durable goods orders came out today, unexpected, unchanged, so it really not much going on there, but we always rely on our trade triangles, and that's the secret. So let's clear the screen and go to our markets, starting with our portfolio manager. So go right there, and you can see right here that we're going to cover these markets today. We're also going to look at the scan for new trades. So let's look at this market. Plus 55, we know what that means. It's a trading range. We're at plus 55 now on this chart. And you can see really, while it's up from the opening, it really hasn't gotten anywhere. 1402. This is a daily chart of the S&P 500. If we scope this out to 3 months, you'll see a bigger picture. And you can see this is where it's really going to be. I think it's going to have a real tough time right around this 1408 level, 1410 level. It's also cyclically, I think it's possibly there a change. But the most important element here, in my mind, is our trade triangles. Both the long-term, the monthly, and the weekly are still negative, indicating that the trend is still down. The fact that we're 55 indicates that we're in a short-term trading range, but we're getting very close to a overbought condition here. We're not there yet. So as we said yesterday, I think we're going to see this market sort of go sideways and then roll over, just much like it did here and then here. That's indicating that the longer term trend is going to take effect and push the market down again. And that's all going to be predicated on the fiscal cliff, of course, and we'll see how that plays out. It's much the same here with the Dow. The Dow is actually down for the day. You can see it's down yesterday, it's down again today. I think you could see a pullback quite easily to the 1270 level. Again, the monthly and the weekly are negative, plus you're below the 200-day moving average. Again, we've never gone over the 200-day moving average, unlike the S&P that has moved over the 200-day moving average. So it's still, to me, it's still not a very positive chart picture. It looks as though in this market, you sort of rolled over, this whole period, you sort of rolled over the top like that. And really, there's a lot of work over this market. So you can see this area here that sort of was support. Now it's resistance. So I think we'll see that play more and more into the future here. So let's clear the screen, go to our next market, and that's going to be the NASDAQ. And that's, of course, a different picture than some of the other ones. We're actually plus on that market today. We've had several days up, and I think this is the technology story, but look what's happening. You're also getting very, very overbought here. Plus, all of our trade triangles are negative. You're still, even with today's action, you're still below the 200-day moving average, and you've just had really almost every day it's been going higher, and that's largely due to what Apple's coming out with their stock. But nonetheless, the longer-term trend, it looks as though it's, at least for the moment, on the downside with our moving average. Our moving averages are higher than the price, the 200-day moving average, plus our weekly and monthly trade triangles are negative. So that's something to take into consideration. It's Wednesday tomorrow. Obviously, we're going to get quieter as we move into the end of the week. It's the end of the month, and a lot of people are watching these markets very carefully. So looking at crude oil continues to move sideways. We talked about this yesterday, and it really hasn't changed much at all. There's the pattern. We're sort of just rounding out here. Now with crude oil, based on our World Cup portfolio, which the results have been pretty spectacular, all we take into consideration are these two elements. The weekly is for trend, and the daily is for timing. So now we have 89.67. I know that the market is down from there. It's 87.80 approximately. But nonetheless, the trend is still up according to our tools, and the daily has not turned down yet. So again, we still think we're building a base, and the only thing really holding this thing back is the 90 level, and that's the real trigger point here for crude oil. This is the January contract. So let's clear the screen and go to our next market. And we are going to be looking at our trade triangles later today to see if we can find some new buys or sells in that criteria that we search for. So look forward to seeing that in just a few minutes. So here we are. This is the Eurodollar. Remember, I can't speak this morning. The Eurodollar, we said around the 130 level, that was going to be resistance, and that's in fact exactly what happened. All of our trade triangles have in fact turned green, which means the trend is definitely up. But today's action indicates we may see some more consolidation. What's really sad about this is the fact that if the euro is going up, it means the dollar is going down. And that's not necessarily a good thing for the U.S. economy. So let's see how this plays out. But generally speaking, I would not be surprised to see this market come back down, perhaps to the midpoint of the Donchian trade channel. That would take it somewhere, I'm guessing, around the 128 level, 128.50 level. Not much further than we are right now, but I think we'll see some consolidation there. We are overbought, of course, and that's a big plus for the U.S. dollar and not for the Eurodollar. So let's see how that plays out. But looking further down, the MACD is still positive. All of our trade triangles are positive. So you have to say the trend is your friend, and the trend is clearly up in the Eurodollar against the US dollar. Looking at the Forex, this is the spot gold. Gold continues, in our opinion, just like it comes up here, continues to consolidate, even though it's taken a little bit of a breather today. It's still getting used to these newer levels. Remember, we were trading down below the 1720 level not too long ago, actually almost down to 1700. So we're some like $40 higher, $50 higher, and the market's beginning to consolidate, and I think that's a positive thing. So again, all of our trade triangles are green, indicating a very strong upward trend, and we are plus 90, also a very strong trend. So again, these are all pluses. We're still plus on the MACD. So all of our indicators are indicating this market should go higher. Obviously, it looks as though the 1740, 1735 level is support for this market, and I think that's what's going to keep the market strong. So let's see how things work out. But generally speaking, I would not want to be short gold. I think it could just pop any moment and see another $20 run up. The big resistance level here is the 1800 level, which we talked about yesterday. That's right around here. That's going to be the stopper, at least in our opinion, on the upside. So 1800 is definitely a stopper. But again, that is $50 higher than we are right now. So if we see this market move up to where we think it should move, there's still a very large move on the upside. So this, again, this is a base. We're trending higher, and all of our systems are go on gold. So don't be short this market right now. So let's clear the screen and go to our next market. The next market we're going to be looking at is silver. Silver's been the leader all along here. And silver's a little bit lower for the day, but generally speaking, you can see how this market's trended up out of a base. All of our trade triangles are positive on this market. You can see how it's clearly rounded out to the upside. You broke out of the base here, right here, and it still wants to go up and challenge this 35 level, which is this previous highs right here. And I think we're going to see that happen with all of our trade triangles green. And that's the way the trend is going. So let's see how that plays out for the rest of the week. Moving on to our next market, which is copper. Now, copper was interesting. That gave a signal today, a weekly signal indicating, pushing all of our trade triangles green, indicating that there's a recovery at hand based on market action. Whether it's there here or not, I don't know, but the action says you should be long copper based on our tools. Not only our monthly is positive, but also our weekly and also our daily. So everything is a go here on the upside. 3.55 is definitely a resistance level, and the market needs to get over that level if it's going to move higher. But we may see this market go sideways for a while just below the 355 area. So let's go to our recent trade triangles. And here's the recent trade triangles that we're looking at. The first two I would rule out because they're, quite frankly, even though they have big volume, they're trading at their penny stocks, and we don't really like to trade penny stocks. We don't get involved with penny stocks because it's too volatile. But the one is Akamai Technologies. So let's take a look at that chart now. It has a sell signal. All of our trade triangles are definitely negative on that. The third one kicked in, the monthly kicked in today. And we'll see the chart in just a second to see whether this looks like it wants to go lower. But generally speaking, yeah, this is not a good sign for this stock. Under the 200-day moving average, out of the downturn trade channel, and it looks as though if you just let's just put a close-only chart on this. Yeah, if it closes down here, this is going to be the lowest it's been in quite some time. It looks as though, let's scope this out to year to date. Yeah, it looks as though we're just rolling over here again on the downside in this market, and also our MACD is negative, as are all of our trade triangles. You can see the monthly kicked in at 34.28, currently trading at 34.75. You can actually sell it at a higher price if you want to be short this market. But generally speaking, the trend is your friend, and the trend, at least in this technology company, is not good. So I'm Adam Hewison for Market Club. I'll be back tomorrow and have a great trading day. Lots going on. Watch the metals, watch the crude oil market, and watch the Middle East, of course. That's still a big flashpoint in my mind. So have a great trading day, everyone.